Okay, ji, hello everyone. This is Ali Mohammed Sheikh. I'll be starting a new topic today. That is control accounts. It's an easy topic as far as your exams are concerned. You just need to clear some concepts, how to solve these in your exam. So let's begin. I'm starting with the very basics, purpose or say benefits of drawing up control accounts in your financial statements. Number one, examiner simply asks you write down any two benefits, any three benefits of control accounts. So there are two types of control accounts. Number one, sales ledger control account, and number two, purchase ledger control account. So the purpose of both the accounts is that it shows or it provides the total of all the trade receivables. Who are trade receivables? The credit customers of the business, the people who owes the business, and they are the current assets. Okay, and trade payables at the end of the accounting year or say financial year. And who are the trade payables? They are the credit suppliers of the business to whom business owes. So until and unless you pay them, they are current liabilities of the business. You have to pay them within a year. So the first purpose or the first benefit of drawing up control accounts is that it provides you the total of trade receivables and trade payables at the end of the accounting year. The second purpose or say second benefit of drawing up control account is that it helps to detect errors in the ledgers. Whenever you draw up ledgers and you draw up personal accounts of the trade receivables, control account balance and personal account balance should be matched with each other. If they are not, it means there are certain errors. So to locate errors, you can draw up control accounts to match it up, to reconcile it with your trade receivable balances at the financial year end. And it connects it with another dot, that is it helps to deter fraud in the accounting books. There would be very much less chances that any fraud may occur by any person in the business, because they know if they carry out any fraudulent activity, they might caught, because the control account balance might not match with the ledger balances of the personal account of trade receivables. So there are three purposes, there are three benefits of drawing up control account. Number one, it provides total of trade receivables and payables. It helps to detect errors, and it helps to deter fraud in your accounting records. So you need to memorize them, you need to put it in your answer sheet in order to get maximum marks. So let's begin with two types of control accounts. Number one, sales ledger control account, and in other words, they are the total receivable accounts. And purchase ledger control accounts, in other words, they are the total of payables accounts. So some of the teachers may ask you, okay, you can memorize the formats. Some gives you the abbreviation of the debit side and the credit side to make it easier to memorize and to put it in exam according to the abbreviations being memorized by you. So I will make it easier to understand. Okay, you do not need to memorize all the silly abbreviations to memorize the format. You just need to practice the concept. So let's begin with the concept of control accounts. I am starting with sales ledger control account. Left hand side is the debit side, right hand side is a credit side. I am using dollar figure over here. So let's clear your concept first. It's a total of trade receivables account. Trade receivables are the current assets of the business, and the asset nature of any account is that it increases on the debit side and it decreases on the credit side. So I'll make it easier for you to understand. Whenever any transaction that increases the balance of trade receivables, it will be recorded on the debit side. And whenever any transaction that results in a fall of trade receivable balance in your books, it will be recorded on the credit side. Just take an example. If you make sales on credit, it will increase trade receivable balance. Why? Because the other person will start to owe you the balance. So I will record credit sales on the debit side because it increases the balance of trade receivables in the books. Another example is that any irrecoverable debt has incurred over the period of time. Whenever any person becomes bad debt, irrecoverable debt, they are not going to give you the amount back. The balance of the tradable account will be decreased. So, by irrecoverable debt, the balance of the tradable decreases, and I will record it on the credit side. Irrecoverable debts. So in exam, you just need to clear a concept over here that it's an asset account. It will increase on the debit side and decrease on the credit side. So whenever any transaction increases the balance of trade receivables, you will record it on the debit side, and whenever any transaction decreases the balance of trade receivables, it will be recorded on the credit side. You just need to practice this. To summarize the format, I am going to the lecture because it is already recorded. So let's begin with the format of SLCA, Sales and Control Account. In the exam, they might give you two balance BDs, one on the debit side and another on the credit side. Whenever they give you only one balance, it is assumed to be on the debit side, because by default it's an asset account, the balance brought down should be on the debit side. But if they give you two balances of your balance BDs, it might be given you on the debit side and on the credit side. You need to put the debit side balance on the debit side and credit side balance on the credit side. For example, the balance brought down on the debit side in the exam is $2,000. What does it mean? It means trade receivable owes you $2,000 at the start of the term, at the start of the month. What does the credit balance shows? For example, they have given you a balance brought down of $200 on the credit side. What does this show? The balance on the credit side shows that some of the trade receivables might pay you in advance, or they have given you extra amount with the previous sales to be adjusted in the future. So it's a extra balance that is received from your trade receivables at the start of the term. So technically it's a liability on you because it's an extra amount being received from your trade receivables. So whenever the credit amount is given in trade receivable account, it will count as a liability. Okay. So coming on to the format now. The transaction that increases the balance of trade receivables could be credit sales, dishonored checks. What are the dishonored checks? We have already discussed in bank reconciliation chapter as well. Dishonored checks are the checks that is being returned by the bank because maybe of insufficient balance of the trade receivable bank account. So when you received the balance previously in form of check, you have been recorded on the credit side because the amount is being decreased, the balance has been decreased. When you will be notified by the bank that the check has been returned, then the dishonored check will be recorded on the debit side to increase the balance of trade receivables again in your books. So I hope it's clear. Next up is interest charged on overdue accounts. What is this? Some of the trade receivables might delay paying you back. So you might put interest on their balance, the interest increases their balance due. So interest will be recorded on the debit side. Cash refund to credit customers. This is extra cash that is received, so you need to return it back. So cash refund will increase the balance of the trade receivables and will be recorded on the debit side. Coming on to the credit side, sales returns will be recorded on the credit side because it will reduce the amount of the balance owed. Bad debts or irrecoverable debts will be recorded on the credit side. Discount allowed will be recorded on the credit side. It will again decrease the balance of trade receivables when you allow them the discount. And lastly, there is a balance of contra set off. What is contra set off? Let's take an example of that. For example, I am running a business with the name of Burak Academy. It's a OA level institution. For example, a person ABL Limited is my trade receivable as well as trade payable. So I need to collect amount from the person and I also need to pay him back. So in order to offset the balance, for example, I have to receive $1,000 from him and I have to pay him $2,000. To settle the amount, we will set them both the amounts together, and the lower figure will be paid out to the trade payable. So over here the contra set of amount will be 1000. It will be offset each other's balance. The settled amount would be 1000, will be recorded on the credit side of my SLCA. Why is it on the credit side? Because the contra set of settles the balance amount owed, so it will be recorded on the credit side. It will reduce the balance of the trade receivables. So I hope it's clear to everyone. By putting all the transactions on the debit side and on the credit side, there are certain things you need to memorize as well. Beside this, only credit sales will be recorded in the SLCA. Cash sales will be ignored because cash sales do not create any trade receivables. So whenever they give you cash sales in the exam, kindly ignore it. You need to only put credit sales in the books. Number 2, they can also give you provision for doubtful debts. It will not be going into your SLCA again. Provision for doubtful debt is only being recorded by the business in their books. It will not be notified to the trade receivables because provision is an estimate that you make in your business, in your financial statements to record any doubtful debts that may incur in the future. So in other videos I will also explain the provision for doubtful debt concept. For now you need to skip cash sales and number 2, provision for doubtful debt in your SLCA. So this is the lecture of SLCA. Now coming on to the PLCA. What does PLCA record? Let's explain it in bit detail as well. PLCA or purchase ledger control account is a trade payable account. It gives you total of trade payable at the financial year end. Debit side, credit side, and if it's a trade payable account, its nature is liability, and liability always increases on credit side and decreases on debit side. To make it more simpler to understand, whenever any transaction that increases the balance of trade payables, it will be recorded on the credit side, and all the transaction that decreases the balance of trade payable will be recorded on the debit side. You just need to follow the nature of the account. So to take an example over here, for example, credit purchases from Mr. A, $1,000. So clearly your liability is increasing. Mr. A will be recorded on the credit side and purchases are recorded on the debit side. So over here it increases the balance of trade payables, it will be recorded on the credit side. So credit purchases increases the balance of trade payable, it will be recorded on the credit side. You need to just memorize this concept, it's a liability account. And for example, discount received from Mr. A, $100. So when your trade payable is giving you a discount, it is called discount received, it's an income. And discount received decreases the balance owed to the supplier. You are paying him less amount after deducting discount received. So discount received decreases the payable balance, it will be recorded on the debit side. I hope it's clear. So you do not need to memorize any silly abbreviations on the debit side, on the credit side and put it in the exam. You need to clear your thoughts because in your further studies you might be asked what are the nature of these accounts. So again, repeating it myself again, trade payables increases on the credit side, all the transaction increases trade payable balance will be recorded on the credit side, and all the transaction decreasing trade payable balance it will be recorded on the debit side. Coming on to the format, going back to the lecture. If only one balance is given, it will be recorded on the credit side by default because it's a liability nature account. When two balances are given, debit side balance will be posted on the debit side, credit side balance will be posted on the credit side. So coming on to the credit side, credit purchases increases the balance of trade payable, refund by payables. If any extra amount has been paid to the trade payable, it will be coming back, it increases the trade payable balance, refund by payables will be recorded on the credit side. Again, if any of your payables charges you interest, if you're delaying the payment, interest charged by payables increases the balance owed, it will be again recorded on the credit side. Coming on to the debit side, checks or cash payments made to trade payable decreases their balance, debit side entry. Purchase returns decreases their balance, discount received decreases their balance, and contrast set of, as I have explained it before, it's an offset amount between the payable and receivables. Other party is your payable and receivable all at the same time. To offset the amount, you need to record contrast set of entry in both the ledgers. It will be recorded on the debit side of PLCA and on the credit side of SLCA to offset the amounts in both the respective ledgers. Another note over here, only credit purchases will be recorded in PLCA. Cash purchases will be ignored because trade payable only arises when you make purchases on credit. So cash purchases will be recorded in the cash book. Credit purchases are being recorded in PLCA. So over here in exam, if they give you any cash purchases, you just need to ignore it, and you need to only record credit purchases in this respective account. So I hope the lecture is clear. One more thing is left over here. What does credit balance and debit balance on your PLCA tells you? Credit balance, for example, $2,000 are given on the credit side. It means you owe $2,000 to your trade payables. Simple. It's a balance owed at the start of the term. What does a debit balance shows? For example, $200 are also being given on the debit side. What does it mean? It means that you have paid them some extra amount at the previous year end. So it's a positive balance, it's a current asset balance, it will be recorded on the debit side. So over here, if you pay extra amount to your trade payables, some advance, some extra amount, some prepaid, deliberately or by mistake, it will be recorded on the debit side because it's an asset amount. Okay. So if they give you two balance BDs, it will be recorded on the respective sides, and if they give you only one balance, it will be recorded on the credit side. You just need to follow the nature of the account. So I hope lecture is clear. In the next video, we will practice some questions, my workbook questions as well, and some past paper questions to make it more easier to understand. I hope the lecture is clear to everyone. If you have any queries, you can drop me a message, or if you like the video, kindly like it, share it, subscribe it, and press the bell icons for upcoming videos. Thank you so much.